Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three things. First, why did rupee break the key level of 84? Second, what is the outlook for dollar rupee pair for coming days? And finally, strategy for exporters and importers. There are three reasons why rupee had moved above 84 levels last week. Reason number one is in the month of October, FII have been selling in Indian equity market. They have sold close to $6.4 billion worth equity in last 15-20 days. Second, crude oil price, which was stable in the month of September, in last 8-10 trading session, it has moved by 10%, which is adding pressure on India's trade deficit. Third and final reason is dollar index, which in the month of September had touched close to 100 kind of level, now again got weaker and it has touched 103 kind of level, which is putting pressure on all emerging market currencies. But the question is, what next? To answer that question, let me show you an interesting chart. If you see 10-year yield chart, 10-year yield chart has been a leading indicator which is able to predict the momentum of dollar index from last couple of months. 10-year yield when broke the key level of 4.10 last time, it had given us a sell signal that dollar index is going to move lower. Currently, 10-year yield is trading close to its 200-day moving average, which is near 4.10 kind of a level. It is indicating that we can see a reversal in 10-year yield from the current level of 4.07 to it can move lower towards 3.90 to 3.70. Now let me show you an interesting chart. 10-year yield ka replicate chart is happening in dollar index. Dollar index is also trading near its 200-day moving average, suggesting that 103.20 to 103.50 is going to act as a strong resistance for dollar index, and dollar index is gradually likely to move towards 101.50 to 100 kind of levels. Fundamentally also, the major constraint in the US economy is today its growing debt, and whichever party is going to win US election, their policies are suggesting that the debt level is going to continue to increase in coming days. If that happens, dollar might become weaker further. In the year 2025, we are expecting dollar index to move below 100. If that happens, all emerging market currencies will be supporting. In the near term, we are expecting euro and GBP USD to bounce back from the current level. Euro, which is currently trading near 1.0937, expected to move towards 1.1080 kind of a level, and pound, we are expecting it to move towards 1.3250 from a current level of 1.3050. Now let us discuss outlook on rupee. There are a few reasons why we expect rupee will not break the key resistance level of 84.25 to 84.30 kind of a level and should gradually move back towards 83.80 kind of levels in coming days. Reason number one is on 19 October 2022, rupee broke the key level of 83. It took 2 years for rupee to move from 83 to 84 kind of a level, which clearly shows that RBI is able to manage the currency well. And in coming days also, with the kind of reserves they are having, they will be able to protect the rupee from further weakening. India has a trade deficit with China close to $85 billion. Currently, CNY INR is trading close to 11.90 kind of level. In coming days, we are expecting dollar index to get weakened and all Asian currencies should ideally get stronger. In case rupee continues to get weaker, then CNY INR might move higher towards 12.10 kind of level or 12.20 kind of level, which RBI might not be comfortable. because of which they might intervene and ensure that rupee does not get weaker beyond 84.20 kind of levels. Final point है, in next 10 to 15 days we are expecting inflows close to 2 to $3 billion in terms of corporate raising QIP, and Hyundai and Swiggy ka IPO are coming. If that happens, then it is going to support rupee. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Thin margin exporters के लिए Monday morning will be a crucial day. In the first few hours of the trade, they have to observe that whether rupee is moving below 84 or not. If rupee starts moving below 84, then ideally they should go and cover 100% of their open exposure. In case rupee is able to sustain above 84 kind of a level, then between 84.05 to 84.10 kind of a level, they should hedge 70 to 80% of their open exposure. For 20%, they can target higher level of 84.15 to 84.20 kind of levels. Any exporter who is waiting for higher level, they should keep a strict stop loss of 84 or costing whichever is higher. Now let us discuss strategy for thick margin exporters. Before doing that, let me give you an important data point. On 4th October, rupee was trading near 83.95. If any thick margin exporter had booked a forward of 30th September, he would have received the rate of 83.90. On 11th of October, when rupee touched 84.05, if someone wanted to book a 1 year forward contract of 30th September 2025, he would have got the rate of 83.83. Basically, it indicates that despite rupee has moved higher, premiums have fallen. And if you can observe, the interesting point is that beyond 30th April, anytime when you have booked forward, you would have got better rate on 4th October as compared to 11th October. So the idea for thick margin exporter is that they should continue to cover. Apart from that, as we have discussed in the beginning of the presentation, that it took 2 years for rupee to move higher by 1 rupee. So basically, rupee ka weakness is lesser than the forward premium. So we will suggest thick margin exporters that whenever rupee moves towards 84.05 to 84.20 kind of a level, they should ensure that they are hedging and maintaining a hedge ratio of 55 to 60% of their annual exports if they are covering on anticipation basis. If they are covering on confirm order basis, they can keep a hedge ratio of 75 to 80%. Now let us discuss strategy for importers. On Monday morning, importers should see whether rupee is going below 84 or not, and they should keep a strict stop loss of 84.10. If rupee breaks the key level of 84.10, then ideally they can go and cover 15 days ka 30% of their import near 84.11 or 12 kind of level. Beyond 15 days, we are not suggesting importer to cover as of now, because we are expecting rupee can move towards 83.80 to 85, 83.85 kind of level. During that time, they can go and cover. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.